Welcome to the workshop. You've spent this week gathering your tools, candlesticks, indicators, and chart patterns. Today, we're going to put them all together. We're going to build our very first trading strategy. A strategy is your blueprint for success. It's what separates disciplined traders from gamblers. Let's get building. A good trading strategy has 4 key components. First, your time frame. Are you a day trader or a swing trader? Second, your entry signals. What specific conditions need to be met for you to buy? Third, your exit signals. When do you sell? And fourth, your risk management. How much are you willing to risk on each trade? Let's build a simple trend following strategy together. The goal is to catch a ride on an established uptrend. Our time frame will be the 4-hour chart. Our first entry signal is that the price must be above the 50-period EMA. This tells us we're in an uptrend. Second, we wait for the price to pull back to the 20-period EMA. This is our entry zone. Third, we look for a bullish candlestick pattern right on that 20-period EMA. This is our trigger. And fourth, we check the RSI to make sure it's not overbought. So to recap, uptrend, pullback, bullish candle, RSI check. If all 4 conditions are met, we enter the trade. Now for the most important part, exits and risk management. Before you even enter a trade, you need to know where you're going to get out. We'll set a stop loss just below the low of our entry candle. This is our safety net. If the trade goes against us, we get out with a small manageable loss. For our take profit, we can target a recent high, or we can use a risk to reward ratio. For example, if our stop loss is 2% below our entry, we could set our take profit at 4% above our entry. That's a 2.1 risk to reward ratio. Once you have your strategy, you need to test it. This is called back testing. You go back in time on the charts and see how your strategy would have performed. This will give you confidence in your strategy and help you to refine it. After back testing, you can move on to forward testing or paper trading. This is where you trade your strategy in real time, but with fake money. This is a great way to get a feel for the strategy before you risk any real capital. Building a trading strategy is a personal journey. The one we built today is just an example. The goal is for you to take the tools you've learned and to create a strategy that fits your own personality and risk tolerance. For your Do Now project, you're going to do just that. You're going to design your own simple trading strategy. Congratulations on an incredible week. You've gone from a chart novice to a budding technical analyst. Next week, we're going to take our trading to the next level with portfolio management and automation. I'll see you then.